And after a nervous Monday, U.S. markets, they gained yesterday on rising speculation of a third stimulus from the U.S. Federal Reserve financial and material stocks. They were the ones to bounce back in trade. Tech stocks were among the street's most favorite for the second day in a row, and Oracle was the shining star yet again. But the hope of a third round of monetary easing remains central to investor sentiment on Wall Street. As the signs of an economic recovery flagging off, many believe that the American Central Bank may be forced to extend the Operation Twist, which expires in the next 10 days. The decision is expected today when the two-day meet of the Fed officials is going to end.
What about Asia and other basic asset prices? We start with the Asian markets. Hong Kong up 0.5%, Japan up about 1%. Chinese markets, they are trading with the upward bias, and smaller markets like Korea, Taiwan, and even Singapore, they are also trading with the upward bias. So by and large, Asian markets, they are firmly fixed in green. Currency and bond markets, they are really telling you the true story. The euro has stabilized against the dollar. Global volatility last night has plunged further, and dollar index is now way below 82. Dollar index is now at a fresh 1-month low. So needless to say, globally things are looking charged up. Globally, the risk-on trade clearly has extended itself on hopes that US Fed tonight will talk about a quantitative easing, whether it is extension of Operation Twist or a fresh QE3 program. Now, that's good news and that is bad news. So if we get a strong quantitative easing, money managers would say that's in the price. The bad news here is that if we don't get a clear sense of a further quantitative easing program from US Fed tonight, that will pour cold water on the current market momentum. So globally and locally, it's really all about regulatory action. As of now, markets are hoping for some big regulatory action. They want to hear something from the man you just saw on the screen, Ben Bernanke. The only risk I've said is that if he just keeps it safe, he just minces his words and refrains from a commitment, that will for sure spook not only local markets but global markets also.